Tuesday, July 11th, market analysis, Stan Ehrlich. Good morning, 10:05 California time. We've got still almost 3 hours until the close, so we're just a little bit past the middle of the day. And today is so far a modest up day of 1.5 higher on the Spider SPY. And let's just review the last few weeks through about last couple of months. Markets come up to major historical resistance, May, June, managed to push through it very nicely. And that was the start basically on June 1st. By the middle of the month, it had gone so much higher so quickly that it got overbought and the price action starts to turn yellow. So we expected and talked about the likelihood of a correction because there's a gap down here to close at 423, give or take a fraction. And there still is a gap from the beginning of June, and that is now approximately a month and a half behind us, which is not too far off, and we still need to pay very much attention to that. So what happened after the low that we made, which was coming down to close that gap, I thought, and had predicted, but it stopped going down on June 26th. Now that's 10 days ago. During this last 2 weeks, it came all the way up and made actually a minor new high last week. I believe it was Monday or Friday the week before that, and couldn't stay there, closed a little under the previous high, and then went sideways, and boom, down, and actually gapped down. Well, the next day, last Friday, we rallied, closed the gap, fine, no more triple island, talked about for about 1 day. They're almost unheard of, so didn't expect it to work anyway. But the double top is still there. And that is from June 15th's high to the 30th of June. The low between those two highs will allow you to measure how much lower it's going to go if we can break below on a closing basis. The low, again, made 10 days ago. So today's up 1.5 points. What does it do for me? Well, obviously, it's getting a little bit closer to this double top. Triple tops are very rare. So if we're going to start pushing right against that blue line, against those two other highs, I'm afraid it's probably going to go through it and start running up again substantially until it gets overbought again, maybe for several days, and a significant nice rally. Oh yeah, okay, right up into this resistance area 454. So that's the first time I'm mentioning overhead resistance, and it is significant. That 454 resistance starts from, gosh, the shoulders on a somewhat sloppy head and shoulder top that the Spider made way back in the late part of 21 and the beginning of the bear market and early January of 22. Wow. Major resistance historically, and that'll be the next rally high. And it could be in that zone, not necessarily 454, but up to 462. Yep. So a little bit of an 8-point zone there, where it bottomed out once, had lots of trouble, eventually started a bear market after it couldn't stay up there. Well, it did for quite a while, frankly, but we got a bunch of reversals. And then we saw the last shoulder in the same resistance area that we might just get to pretty quickly here. So this is the first time I've talked about upside objectives. I don't think that's going to happen yet. So let's zoom in on closer price action, which is mostly relative to the DIA and Spider as QQQ as well. The Russell's a little different. So let me rescale quickly, and I'm thinking we're going to stop rallying, and it could be today. We're up against the previous minor little low on an opening just a few days ago. We're very close to the price range where once we got there, we couldn't stay there but 2 or 3 days at best. The last time 2 days ago, it just plain stopped right away and came all the way back down to even a little lower than where it opened and lower on the day after being up quite a bit. So this is the territory price-wise where you got to watch for it to start to fail. Now, the first significant sign is making a low lower than today's low. which could happen by the close. After all, come on, we're up 1.4. That's not a lot. All right, let's look at the 1 minute price to see if there's any sign here of it topping out. We had a high an hour or two ago, a quick break, and then it came back and it's trying to make another new high for the day. It might. I need to get below 140.40, and that's going to look a little bit more bearish. And then, of course, the low of the day, which was an hour or two after the opening, that would cause me to be a lot happier to then continue to expect the gap that I talked about a few moments ago on the daily chart to finally come down and get closed. What about the DIA? It's had a lot of trouble lately. It got up there and left behind. Actually, it may have closed that gap today. And in fact, it has. We just, in the last hour or so, rallied enough to get back to the low of the 3-day island top and close that. Wait a minute. Nope, actually hasn't done it. I'm sorry. Needs to hit this line right here on the 1 minute chart, and that will get back to the low a few days ago. Just a second. Right there. So, hasn't done it yet. That implies to me that there's a chance for one more set of highs and then Tierra del Fuego, but we'll see. What about the QQQs? It's barely higher in the day, half a point. DIA is up 2 full points, and we're up 1.25 on the spider at the moment. So nothing's tremendously strong or looking like it's going to get carried away to the upside. So I think it's going to roll over and start to head Tierra del Fuego again, and we're starting to do it a little bit right now. Okay, the 2000 real quick here, Russell 2000. Came right back up into that resistance area that has so many times stopped the rally, going on, or a downside move all the way back to January of 22. That's all of last year, essentially. This support and resistance zone was very responsible for a bunch of tops and bottoms. And here we are, only in the last month and a half or so, bang against the resistance, fell back down again, bang against resistance just several days ago, fell back down again, and here we are again. Today's high is right up there at the top of this little red zone against that green dashed line. Perfect spot to top out and start to slip back. It just haven't done it very much. We're still up 87 cents, but again, that's not a lot, and you got way over 2.5 hours to go. So, okay, futures. I've got something that really is something I started to talk about 4 days or so ago. It's a cycle in the bond market and 10-year notes that I think will knock your socks off. It did for me when I saw it, and I've been using cycles off and on for 4.5 decades, something like that, since I invented the Ehrlich Cycle Finder in 1977. The E-mini is just about the same as the SPY, the spider. So the difference is it's different trading hours. It can get a little over more or less overbought, sold. The gaps are rarer, doesn't close for very long, et cetera, et cetera. So at resistance, we'll see what's happening. By the way, none of them are close to being overbought or oversold at all. So that doesn't help. It's just the way the market's moving and the price levels that it's at the moment. Let's look at bonds. Here we go. I started talking, I think it was about, July either 5th or the 3rd, Monday or Wednesday. Tuesday, of course, was 4th of July. And I was talking about a cycle I had noticed that is 88 days from bottom to bottom. And it was expected to be either this Monday or last Friday. I think I was mentioning last Friday, frankly. And I had found it with a cycle tool in TradeStation. They're very common time cycles. But my new version, which is available, is the EC Forecaster, Ehrlich Cycle Forecaster. And we have zones of time around the exact day when we are looking for reasons to go long or short, depending upon, cycle low or cycle high. And I started talking about this cycle low before it has bottomed out so far yesterday, Monday. And again, I started mentioning it coming down into the support area, being yellow oversold and smack dab into the heart of the window of opportunity, WOO, woo, and it is already yesterday touched support, turned around, closed higher, almost had a bullish engulfing, not quite, too bad, and up again today and a new high for the last couple of days. Just the barely beginning of this move if this cycle works correctly. You never know in the first couple of days, usually. Let's look at the history of this thing. It's a whopper. Okay, 88 days earlier than yesterday, we hit the exact bottom of the break. 88 days before that, we hit the exact bottom of the break. So far, that's 3 in a row. I don't remember seeing that. 4 times backward, 88 days earlier on June 16th, a year ago, we have a bullish engulfing ER buy signal in green, either exactly at the middle of the window of opportunity or maybe one day early. Plus the fact that we had a rally of a couple of months and we got a sell signal smack dab on top. Great. What about the time before that? We are still in the window of opportunity, the woo, when this market turned around. This is unbelievable. And what about 88 days before that? We're in the window of opportunity, right at the bottom of a little double bottom, the first of 2 lows. What about 88 days before that? Now, this time we didn't catch the bottom. In fact, it inverted, and it was a low and it should have been a high. And we caught the beginning of a very good rally after a couple of months of sideways. So that's not bad, but I wouldn't call it a cycle low per se. Very useful, profitable, but not a cycle low. And now the cycle doesn't work quite as well, but I can't believe that lately, and past performance is not indicative of future results in hypothetical terms have some inherent limitations. The minimum disclaimer by the NFA and CFTC, I memorized that one decades ago. Just because it's starting out like this, when I'm enthusiastic as hell about it, because it's working, it could fail. The trick is knowing when, how, and taking some profit before it turns to a loss. Because we would have profitable trades if you got in anywhere, frankly, yesterday or the day before. Next chart. 10-year notes. Here we go. Bottomed out on Friday with the cycle low. Same cycles, 88 days. And had a new high close for 2 days yesterday and follow through today. Today's high is the highest in the last 3 days. Nice start. Up to and getting a little bit through the resistance area, which is the first step of the game here. We got to get above this red zone and stay above it and, progress. Otherwise, it could stop this rally. I hope not. Next chart. Crude oil, heating oil, unleaded, natural gas. New highs for crude, coming up definitely a bit more than I frankly expected from support ending up holding, but it's still not turning anything long-term bullish. We still have a major resistance area up at 82.5, and we're 74.5 almost. So there's elbow room to go up more, and it looks like it could. We are very close to overbought, so if it jumps up a lot in the next day or two, then you're probably going to see a short-term high real quick. Next chart. Natural gas. We had a sell signal a few days ago. Today it's giving us some trouble. It worked great the day after the sell signal and the day after that. Yesterday and today it's come back up a little bit more than I'd like, but I don't see anything from an intermediate to longer term standpoint that is turning bullish. I still think this looks like the possibility of a top being built. The head and shoulder idea, that didn't work, so I erased the neckline. But still, the pattern is resistance, sell signals, and I think we are likely to fail on this rally. Next chart is heating oil, also coming up into a resistance area and very, very close to a major bear trend line, the only really good one, which, by the way, has one pivot point off of a bearish engulfing ER sell signal, and the other pivot point is very close to it, and the previous high before that in June of 17th of 22, bingo, the top. And another one before that, March 9th, 22. So some really great sell signals, intermediate to longer term. We might get one if we get overbought at the trend line, which we are close to being overbought at almost 71 now, and have a bearish engulfing. I'd climb all over that to go short, of course. Next, gold coming up a little bit. We got oversold. It's been several days now, a few, and it has a little bit more room. It looks like it's kind of climbing a little feebly. I think we've got more downside potential and new lows to be seen soon. Silver, we got the bottom, like gold and platinum, around the 10th of March or beginning of April, I think it was on the other ones, slightly later. And got the double top in silver, got the bottom of the break. We didn't unfortunately get a sell signal, but we came pretty close. Weren't quite overbought with that bearish engulfing, but so be it. Got oversold recently, so this bounce we're having right now is not a surprise. It could get a little stronger. I'm just waiting for something definitive on the short side because I think it's going to make new lows soon. Next chart, platinum. I have the same basic commentary here. It did already make lower lows by a substantial amount of time, and in the process got quite oversold. So there may be a little more strength short term, but then I'm looking for it to bend over and drop into new low ground again, down into the 80s. Next, high grade copper, longer term trend bearish since the beginning of the year, and lower lows and lower highs. Looking for a sell signal. Today could be something significant because we do have a new high for a couple of weeks, but it's not holding. And we're now closing under 4 closes out of the last 6 or so. Yeah, could be starting something bearish right away. Soybeans, I have talked about this for a couple 3 weeks now. This could be a gigantic long-term huge double top. Momentarily the commentary is a little in jeopardy. I'm coming right back up toward that resistance area that stopped it a week ago in overbought conditions. So this rally needs to fail, and we need to start closing below 1313. Interesting. So once that happens, I am going to be a little more adamant about huge long-term double top. The breakout won't even occur until it finally gets down to below 1070, which is obviously a gigantic support level, 2 lows right in the same price level over many months. So we're getting trapped between a rock and a hard spot, but eventually there's going to be a breakout. Right now, double top potentials. Next chart is soybean oil already started a longer term bear move and just got overbought. So I think it's got more downside, and it may even challenge the 4240 area and start making lower lows and have new lows for 2 years plus. Next, soybean meal, same kind of comment at support. I think it's turned into a bear market. Last rally failed at resistance in an overbought condition 2 or 3 weeks ago. Now we need to start making new low closes below 374, and then it'll probably break 360 and be on its way down. Next, corn. Today we have a brand new bullish engulfing ER green buy signal. We were oversold within the last few days. We have a bullish engulfing candlestick. The combination and other factors turn the price action green, and that's it. This one didn't work very well, or didn't work at all, frankly. This one worked okay for a couple of days, was a profit of a small amount. We bought close to the low the day after the reversal, which is great for ER3. We'll have to see tomorrow and the next 2 days after tomorrow if we can get down into approximately the middle of today's range, whatever it ends up being. Remember, it's still open. And see if the signal turns out to be a good one. I hope so. I expect so. But we always know it may not turn out like we expect, and that's why our yellow dots are there. That's our initial stop loss or protective stop order, and that moves awful quickly, but not on this chart. I don't show that to you. It's the ER3 strategy and the ER1 strategy. So the last sell signal worked great. That sell signal worked pretty good. This is the kind of thing we live for. Top of the rally, beginning of a very big break. That's fantastic. And again, that's what we live for. The bottom of the break and the beginning of a heck of a good rally. Couple of modestly good, but not much profit potentials on those two greens. And I'm not going to go any further. Next chart is wheat. We had a sell signal a couple of days ago. I was very leery about because it was already way down there on the RSI. And frankly, it shouldn't have turned red to begin with, in my opinion. So far, it's sort of working, but today is a significant up day, and we really shouldn't be, and I'm not short. If you're short, it's not because of me. The fact is that this red sell signal was a low level on the RSI, which we're going to build code into to keep it from turning red, and it would just be white. So what have we got? Support, a little bounce, trend is down. To say the least, this is wheat. Of course, it topped out on a bearish ER sell signal way back at the beginning of the war. So I'm looking for lower levels. Can't help it, false sell signal or not. Okay, next chart, cattle. First high we had was a bearish engulfing that worked very nicely for a couple, 3 weeks. And another bearish one along the line that also worked pretty nice. Not quite as profitable. Now here we are making today higher highs than the first bearish engulfing sell signal, which again was on June 7th. So it's now a month and a little bit more, and we're overbought again. Actually, the second time in the last week and a half or so. If this is a high day, I'm going to start screaming bloody murder double top. But it hasn't turned down yet. I don't see any indication it's turning down except for new highs in price, but not a new high in the indicator. That's divergence. And in an overbought condition. That's a setup for something bearish, but it hasn't happened or started. Hogs. Yesterday's bearish engulfing did not work. We got short on a little bit of a rally today around 95.15 and got bumped out at 97. So didn't work, lost a couple. Next. This rally in the OJ is now a little more interesting. Today is an inside trading range day, doji, or extremely close. Not gaining any more ground to speak of, losing some upside momentum pretty much starting yesterday and today. Again, it's just a tiny bit higher at the moment. This rally high, if that's what it is about the right price level and the right timing point for a last shoulder, and that's the head of the formation at the end of May. And on April 11th, we have the first shoulder high. I've already drawn in the neckline. It got shifted a little bit right here, but that's what it looks like. And that should be down just a hair. So breaking below this blue line, the neckline, if it starts to go down right away, will cause me to proclaim a head and shoulder top. But when you're rounding the turn on the last shoulder, bottom or top, this being a top, it gets a little tricky. It's got to do it. It can't wait long, period. You wait too long, you get lopsided. If you rally too much, it just kills the formation. Next chart, cocoa. Bull market, what can I say? Not overbought. Looks like it's going to make new highs real soon. Next, cotton the rag. A little higher today. Caught between a rock and a hard spot. Super resistance, 87, 88. Super support, around 75, 76. Until we get a breakout one way or the other, it's going to be a ping pong ball going back and forth. Soybean, sugar, sweet. We had a buy signal a couple of days ago. The market came down close to the stop, but did not hit it, and closed yesterday with a small loss. The first day we're long for ER3. Today, the market goes down again, gets kind of scary, but does not get down below the low at this point. I like what I see. I'm starting to get stronger quicker, and that's a good sign. But I want it to rally even more, get near today's high, and especially close above the bullish engulfing of Friday of last week. And coffee, our last chart. Buy signal didn't work, stopped out today, never really had a chance to make any money, just a tiny bit, probably a small loss. We'll wait for another signal, obviously, but this looks like it's going to continue to work lower. When buy signals occur at support and they really don't work, they should have, could have, would have, but this one didn't, that's pretty bearish. Next is the bond market, and it's still firm, and the E-mini. You guys have a great day. Thank you very much.